everyone. Very nice to see you again. Welcome back. It's been a little time since I've sent out one of these short videos because we have had the pleasure of having both Horizon Investments and Morningstar Investments join us for some of what I refer to as the long form videos. So I thought today I would focus on something that has been a big topic of conversation: inflation, the Federal Reserve. And really those are two topics. However, they go hand in hand. The conversation, our most recent, with Daniel Kemp of Morningstar Investments. Hopefully you've had a chance to watch the replay of that video by now. It is, in my opinion, excellent, and Dan brings up a number of good points. One that he started off with, and I want to start off by reiterating that point here, is there's no perfect answer. The Federal Reserve are right now trying to decide, do we want higher interest rates for a longer period of time, or do we want higher inflation for a longer period of time? I think the answer, based on their very aggressive moves, is they would like higher interest rates for a longer period of time, something we've been through before. Higher inflation obviously costs all of us more money day to day. You can see and hear what's happening within the stock market and the bond market as we face higher inflation month after month right now. So I've had the question of what will break this cycle, if you will, or what are some of the things that could break this cycle? Not necessarily will, but could break this cycle. A slowdown in jobs report, meaning companies are not hiring quite as quickly as they had in the past. A inflation number that actually comes down. We've had some, we'll say, false alarms that inflation was reducing. That wasn't necessarily the case. It's starting to look like there is some level of, or leveling off of inflation. That's very good news. Assuming we get there, that indicates to the stock market, which is forward-looking, a forward-looking indicator, the stock market, that starts to indicate inflation is reducing, or at least leveling, and we can stabilize within the stock market, and then from there it reacts positively or negatively long term. Last but not least, certainly the manufacturing. How does manufacturing and supply look? So things can get manufactured, but what about supply? Can we then resupply the manufacturers and have products, goods, and services available to us? How quickly is that happening? How costly is that when it's happening? So it really is quite a balancing act that you're watching unfold in front of you. And then, of course, the impact each of the decisions and comments that the Fed have impact our investments. So with that stated, we are watching it closely. I've had many conversations with Morningstar, with Horizon Investments. I've had a DFA into those conversations as well on your behalf. And I am going to, again, ask you to schedule a conversation with me. I am very glad to have that discussion with you, more specific to your investments, anytime. But we are keeping a close eye on it as we reach the end of 2022, what it means for returns or continued market volatility, and of course into 2023. Have a great day. Look forward to talking with you very soon.